All right, so let's go ahead and get started into how we utilize and break down fair value gaps, how to identify them, and what they even look like. So here we are on the 4-hour chart on GBP, JPY, as you can see up here using OANDA. And I'm going to utilize the magnet tool just kind of for the more precise look. And you're going to see, mark this area here. I will mark this one right here as well. And these are fair value gaps. Now, the reason that they are fair value gaps, and you can see, is on the left-hand side of this candle, of this huge displacement candle to the downside, this one right here, the candle before it has no selling pressure body or wick that runs down to, let's say, here. Now, this candle that precedes it after this one, this third candle right here, has no buying pressure that runs up to match this area off to the left. So if this looked like, let's give an example real quick. If this was the wick or the body, if this was the wick or body, see how those overlap each other right here? There's no longer a gap. So when I go ahead and delete this off, as you can see, there is now free floating space. There is no candle wick or body on the left or right of this candlestick. And it's a 3 candlestick formation. Now you'd be going, okay, well, what about this gap? So now this would be the first candle, second candle, third candle right here. So then that would also create a gap, like a continuation of fair value gap getting generated. And how we utilize them in price action or technical analysis is, let's say we have a bullish move like so, right? Price is bouncing off, making these higher lows. Well, if price creates a fair value gap with candles right here and comes down, we want to see that hit either the 50 level, which is known as the consequent encroachment, or the fill of the gap. I am not too big on trading the first tap. So divide these boxes, essentially, these fair value gaps, into 3 sections. This first section down to the half, kind of irrelevant. This first half down to here is relevant, and then the fill of the gap is what matters. Does that make sense? Same thing here. Get this gap created. If this price would have only tapped into here, let's say, I'm not taking that trade. I want to see price either touch the 50 level or the fill of this gap. Now, if there's wicks left behind, let's say you get a wick, let me see if I can get a scenario for you real quick. Let's see, kind of a wicking, yeah, kind of like this. Imagine if this wick right here, zoom in on this. If this wick right here would have came down to here, that's fine. It just filled the gap. Now, if the body would have locked below down here, now that's an inversion of that fair value gap. Now price is starting to fall back off. Now it's selling through. So this is no longer acting as support. Whereas these wicks here now are completely fine. See how they tap the 50 level or the fill of the gap and take off out of there? That's what we're looking for in a bullish scenario. Now you can go ahead and let's invert the scale. Now look at this from a bearish perspective. Now we've got the gap here and price comes up and retests this area. These wicks can jab all up through here. They can fill this gap or hit the 50 level and fall off. That's what we're looking for. If price would have only came to here, let's say,
Set your side real quick. Excuse me, everybody. Can you hear me now?
Yeah, it's good.
yeah. So if this would have tapped just the first white line of the fair value gap, we're not interested in that. We're wanting to see price tap the 50 level or the fill of the gap. But it cannot be a body that locks above. It can only be wicks. Now bodies can close up inside the fair value gap. They just can't close above. That makes sense?
And
Let's
as you can
see.
see, fair value gaps are generated all throughout the market. You can find them
Yeah.
literally everywhere. And basically, all they are imbalances where price can come back to and price is drawn back towards to fill that imbalance. So it's basically a form of liquidity and resting orders that are left to be filled. So you have bullish fair value gaps, you have bearish fair value gaps, all formed, whether they're bearish or bullish, they're formed and generated in the same three candle sequence. But you can find them all throughout the market on any futures, Forex indices, anything, stocks. You can find them on any kind of candlestick chart.
Yeah. And as you can see here, they're great areas to come back and get filled. You can see price winds up eventually running back and filling these gaps on this right hand side right here. Whether it fills the 50 level, the top of the gap, 50 level, top of the gap, 50 level, top of the gap, 50 level, top of the gap. They're great liquidity points. Not liquidity points, or I guess you could say um, exit points for, let's say, longs. If you're in longs here, they're great exit points. That's where you typically get a lot of reversals that come off of from these gaps. So those are fair value gaps in bearish scenarios here, like I said, and then these are in bullish scenarios right here, fair value gaps. Oops. So there's all over the place that you get fair value gaps, but they have to align in context of how you're using them. They're great areas. They're great to know, but they have to have context behind them. You're looking at this one right here that got completely jabbed through, body locked out. Now it's a funky looking candle. That's probably you know a a new week opening gap or a market open daily, a new day open gap or something of that nature that caused this candle. But all over the place, you'll see these fair value gaps and use them for take profit areas, stop losses, anything of that nature. But yeah, they're created all over, bullish and bearish. So there's kind of the rundown on fair value gaps.
If you want to learn more, give us a like on YouTube. Go to Market Marksmen on YouTube. We also have TikTok, Market Marksmen on TikTok, as well as Discord, which will be in the link in the bio on the YouTube video. So give it a like, subscribe, and join the Discord. Appreciate you tuning in.
Appreciate it.